Joining us from Beijing, Patrick Chovanec, Associate Professor at the Tsinghua University. Patrick, your call for GDP figures.
Well, I think it's certainly going to be above 9%. The worry isn't really the slowing of the economy. Actually, the government's been trying to engineer a slowdown in the economy. The problem is, and the worry is, that if China isn't moving at these breakneck speeds, that it may reveal some cracks in the economy and in the system that's generating this growth. That real estate developers might start to go bust. They might start to drop real estate onto the market, lower the price. That would have an impact on the banking system and the ability of many of these local governments to repay their loans. So, you mentioned earlier that China's been climbing this wall of doubt. Well, if it doesn't keep climbing, those doubts may catch up to it.
Okay, so what are you saying, that there are cracks in China? Because recently we've been taking a closer look at the banks and properties shares, which have, as we know, fallen dramatically so far this year, and concerns that there is all this lending on the books that no one can pay back to the banks.
Right. You really see this remarkable dichotomy between, on the one hand, banks reporting record sky-high earnings, and on the other hand, people in the market obviously not believing that and realizing that there's another shoe to drop. And so what's remarkable about the high levels of China's growth is not so much their sustainability, but what happens if you fall to even still relatively high levels of, say, 8% growth. A lot of cracks emerge, a lot of people aren't able to repay their debts, and you might have a dramatic turn in events.
Yeah, but Patrick, I'm asking, what is happening in China? You live there. You're an associate professor at Tsinghua University, so you probably have some more insights. I mean, is the banking sector falling apart? Is it going to drag China into a hard landing scenario?
I would say that you can't write that off. You know, most of the GDP growth that we've seen, not just now, but over the past 2.5 years, has been investment-led. It's been measuring the sheer amount of money that has been pumped into the economy by the banking system. That doesn't tell you whether those are good loans or bad loans. It doesn't tell you what the return is going to be. And so these high GDP numbers, which a lot of people tout as evidence that China is doing so well, actually may be more of a curse than a blessing in the end. And
okay,
yes, I do think that when the bill comes due, then you may well see a real banking crisis emerge.
A real banking crisis emerge, right? Okay, so how many more years do we have before that ticking time bomb explodes in China?
Most people say that Chinese leadership can push it through the leadership transition, which will take place next year. I'm not as confident about that. I think that the cracks that you see emerging are pretty serious. Inflation, I think it's too early to write off inflation. Inflation is very persistent in China, and there's a lot of asset inflation, which doesn't feel like inflation, but once people try to turn that into buying power, it gets translated into the general price level. So Chinese leaders are in a real dilemma right now. With the economy slowing and with people running into credit trouble, they want to ease, but they can't ease because inflation is still too high.
Yeah. Okay. Patrick, thank you for sharing your thoughts this morning. Patrick Chovanec, Associate Professor at Tsinghua University, joining us from Beijing.